Mark, you very energetically, as Martin said earlier, described what we're seeing on China markets this morning. A lot of enthusiasm, a lot of expectation. Now, what we've heard from health officials has very much focused on vaccination for the elderly, which, from all we know about COVID, seems like a sensible policy stance. Is that going to be enough, though, to sustain that kind of optimism and that kind of rally?
Yes. That seems like a very simple and clear answer. Now let me provide the context and clarity. Look, this is an anticlimactic announcement if that's all we're going to get. I think that misses the point here. I think the backdrop picture is the reason we're seeing such an enthusiastic reaction is this is a market that was just incredibly discounted. It was discounted for the most gloomy prognosis possible. So anything is more positive than that. This is a market that wants to see positives. Much of the world has given up. I said China is uninvestable. And now, just as they'd kind of given up on China, it's turning around. And therefore, it is much easier to get a positive reaction than a negative reaction. The extra bit of context is it shows the direction. The fact that they're planning to get more people vaccinated shows that they're trying to prepare for reopening. They're no longer telling people we're going to get COVID zero forever, we're going to clamp this down. They're preparing for more infections. That was the signal here. So it is a real positive. Now, the final bit of context is this is going to be a long journey. We've talked about this a lot the last couple of weeks. No matter what is signaled for the government, it's not going to be a sudden bang reopening, no matter what happens on protests or anything else. And therefore, there's going to be more volatility to come. There are going to be large down days ahead when there's suddenly a city lockdown or whatever. But the overall path here is looking likely towards a reopening of China in 2023, and that is a positive for the world economy, and it's definitely a positive for very discounted stock markets, particularly in Hong Kong, but also possibly in China.
You say 2023. I wonder how long it takes. We'll have a guest later on in the hour to talk about that, given vaccination rates where they are right now and ICU provision. But we'll get to that shortly. Let me ask you, sticking with the market, how much of this is going to be problematic in the short term for international corporates? I know one of our colleagues on the Markets Live blog has been writing about how, yes, we've seen car companies and Apple disrupted by some of this, but actually supply chain issues are getting better.
Yeah, I think completely that's the backdrop here. I think look, supply chains. When did we look at supply chains? Up until a few years ago, this was kind of like an unheard of thing. I don't remember in the mid-2000s ever thinking about supply chains. It was really just a trade of where was the affordable labour, the cheap labour the country's going to go to. That's where you played the emerging market story. We've now been primed to be obsessed by supply chains, and people think of, oh no, China lockdowns, that's going to block supply chains. But it's a completely different dynamic now. The real supply chain problem, yes, it was in China, but it was also about shipping routes. That has now been cleared up, and therefore we're just not seeing the real sudden stops in supply chains. It doesn't mean we won't have disruption again, but that's not the major angle here, the major theme to play this story. I should say, while I'm positive, there's going to be volatility, two-way volatility ahead.
OK, right. Remember, you can get analysis and insight from Mark and the rest of the Markets Live team. MLIV Go is the function to use on your Bloomberg terminal.